Hey guys, whoa. Cameron here. Cameron with Emerson Property Management. Every week I bring y'all tools, tactics, strategies, lessons I have learned, things that have helped me build up a sizable rental portfolio in about 2 years and now manage that portfolio. Today, I want to talk about ways to get started in real estate or ways to invest in real estate. So if you guys haven't seen it, first things first, check out the property types and things to avoid when you're first starting out as a beginner. Check out that video because that will really help you sift through some of the deals that might be coming across your desk. I'm going to talk about, I don't even know how many this is, a half a dozen or so ways that you guys can invest, get started. I say getting started, ways to invest. You don't even have to use this as a getting started strategy. But I'll walk through all these and I'll say this is from Save to Invest on Instagram. I saw this on Instagram. I've tweaked it a little bit because some of the stuff I didn't think was real pertinent, but I saw Save to Invest on Instagram and I'll put some link or something below. And he had this, or he or she had this laid out and I want to share this with you guys. So, ways to invest. First one, fix and flip. What does that mean? You buy a property, you do the remodel, and then you sell it for a profit. That's fix and flips. Short, 6 months, 12-month time period, holding period. You're taxed at your highest, and you're at the biggest subject to market fluctuation. So if you would have bought a property in January and tried to do the remodel and then tried to sell it in April of 2020 when we had the coronavirus hit, you're probably going to be in a pinch, because the market has come down, people showings, everything has come down. So you're at a lot higher risk there for market fluctuations. Second way, wholesale. So you go out, you talk to a seller, they sell the property to you for $80,000. You wholesale it to an investor for $90,000, and the property's worth $120,000. Everybody makes money. Seller gets the 80, you get 10. 90 minus 80 is 10. And then the investor gets a property that they paid 90 for that's worth 120,000. That's a wholesaler. Taxes are high. You're out on the streets a lot because you're knocking on sellers' doors. You're in a lot of communications. You have to be very good at sales and negotiations. But it is a great way to get your foot in the door for real estate investing and learn real estate investing. If you haven't seen the video on why I don't like wholesaling though, check that out and that'll kind of walk you through that. But I do think it is a great way to get started. The third way, house hacking. So you guys, this has been popularized by Brandon Turner of Bigger Pockets. You buy a house using really cheap, owner-occupant financing, meaning that you live in it, and then you rent out rooms, whether that's on Airbnb or just some buddies from college or buddies that live in the area that or you put it on Craigslist or whatever, or a classifieds page. You house hack. So every room or whatever, like I said, part of the house, that money's coming into you. So let's say your mortgage is $2,000 a month. You rent out, you bought a 4-bedroom, you live in one, you have 3 other bedrooms you rent out for $300 a month each. That's $900. So your $2,000 a month payment just went to $1,100. Right? That is a great way, and that is by no means a lucrative example that I'm giving you, but there are way more lucrative examples and people. I did it when I first started, and it cut my mortgage by over 50%. So I was paying $1,500 a month. I had 2 roommates, and that cut my payment down to about $700 a month. Yeah. So it was fantastic. For me, it allowed me to save more money and invest more money into real estate. So I'm a big fan of house hacking. If you guys are unfamiliar with the concept, just go on biggerpockets.com and check it out. They have numerous articles on there, numerous. Number 4 is BRRRR investing. If you guys haven't checked out the video, I've got a video on BRRRR investing, and it literally allowed me to propel my real estate investing career from just a couple rentals to I own over 30 units now. So that was the big catalyst for me to be able to continue to buy properties and buy a lot of them. Number 5, or the next one, 1, 2, 3, 4, 5, short-term rentals. So this is Airbnb. Think Airbnb. This is fantastic for markets if you're, if you just want to do a vacation home. You don't want to invest in real estate. You just want to have a vacation home and have somebody else pay for it. Go buy in a popular area. go buy it. It's a lake house, or let's just say, Orlando, a popular vacation or tourist spot. Buy it and do short-term rentals. Rent it out all the other weeks, months of the year that you're not there, or you don't want to be there. Save the week or 2 weeks a year that you do want to be there, and the property will, not always, but most likely, pay for itself. So short-term rentals are fantastic. Think Airbnb, VRBO. My favorite investing, long-term rentals. So I know I've got several videos on why long-term rentals are so fantastic and such a great long-term wealth building strategy. Check those out if you haven't seen them. But the by and large is, over time, residential real estate, leveraged residential cash flowing real estate has produced the largest returns than any other investment. It allows you to create money almost out of thin air with value adds. You get the cash flow, you have the tax advantages of depreciation, you have appreciation, you can leverage. It's just a great all-around investment, and you're not really at the odds of the current market environment. You buy a property, you've got a tenant in there, it's making you $300 a month in cash flow. The stock market drops 20%. You just lost 20% of your portfolio value. My property value, if it dropped 20%, I still got a tenant in there paying me, and I'm still making $300 a month. It has no bearing on what that lease says. Now, when I go to renew, maybe the rents have changed a little bit, but it's very steady. And over the long term, rents have gone up just like your house, just like gas, just like groceries, just like everything. Inflation takes prices up over time. So rents traditionally have gone up over time, and this can be a great way to buy something to subsidize, say, your income if you want to quit your job or go into a lower paying job or do some philanthropic work. Long-term rentals are a great wealth building strategy, and I personally love them. That's why I've been doing it for the past 5 years, and I continue to buy properties, buying another property this month, or next month, closing next month. The next one's lease options. I haven't really done many lease options. It's a unique strategy, and to me, it gets in a lot of the finer details, but basically you lease out a property or rent a property, and you give them the option, that's why they call it lease option, to buy the property at a certain predetermined price. Now, similar to a seller financing strategy, you can lay this out however you want. You can put a determined price in there. You can get a big down payment up front. You can get monthly payments. Lease options really are a canvas. I mean, you can be as creative as you want with them. There's no set way to do it. There's literally no set way. You can do it however you want. So lease options can become very lucrative as well, but I don't really mess with them. I just buy rentals. Then the next one's subject to. So you find a property, they have a loan, say it's a VA loan or just a great loan at a low interest rate. Right now, at the time of this recording in 2020, interest rates are at historic lows. In 5 years, those interest rates might be 6, 7, 8, 9%, while these 30-year fixed mortgages people are getting are still going to be in place in 5, 6 years. So 5 or 6 years, if you're investing and you find an owner that has a loan at 3.5% and the current market interest rate is 5%, you might want to tell the owner, hey, why don't you assign the mortgage to me, or let me buy it subject to the existing mortgage, or do a loan assumption, and I'll assume your loan and I'll take over payments for you. And then I'll give you some money on top of that. So that way you don't have to put a loan on your financial picture or profile, and you get cheaper financing. So it can be a really lucrative strategy. I've done a couple subject twos and I love them. And kind of the other side of that is, or the last strategy is seller financing. And that's really close to loan assumptions, because if the seller has a high loan to value, then seller financing or owner financing or subject to might be the same thing. But seller or owner financing, let's say an owner has a property paid off, totally paid off, then they can sell the property to you and act as the bank. The owner can say, hey, I'll sell this $100,000 property to you for 80 grand, especially since you don't I don't have to deal with any real estate agents or anything like that. I'll sell it to you for 80 grand, this $100,000 property. And I'll give it to you at 5%, which is the going rate. Boom. You don't have to put down 20%. Maybe they make you pay, a couple $1,000 or pay the closing costs or pay 5,000 down or something down, but it's a win-win-win all the way around. Again, you don't have to report that. That doesn't have to come up on your report, on your credit report, especially if you do it through an LLC. I'm not an attorney, don't quote me on all that, but there's ways to remove it from your credit report. And it can be a great win-win for the seller too, because if the seller's getting old, and most of these people with paid off properties are older, they might not want to take 80 grand in the example I was giving you. They might not want to take 80 grand from a property because they're gonna have to pay taxes on the 80 grand. They might rather take $500 a month for 30 years. And then they get that stable income. It's like a pension check almost. So it's the seller finance, owner financing strategy can be also a lucrative strategy. I've done several times as well. I've actually held, people have owner financed me properties, and I've owner financed people properties. So it's a very lucrative strategy. It can be great. And I know I've got some videos on subject to and owner financing, especially if you want those contracts. I've got videos on that you guys can watch. Wow, that was a lot, guys. I hope that was helpful. Again, I laid out those ways that you can invest in real estate. There's several other video mentions in there. If you guys have other questions or something wasn't real clear, call me, text me, comment below, and I'll help you out. Again, this was from Save to Invest on Instagram. I'll put a link to that information below. And again, guys, these are some great lucrative ways, but always, in my opinion, the best way to get in is long-term rentals. The best way to get into real estate is long-term rentals. Okay, guys, thanks. See y'all next week.